right, Patrick, let's jump in. And I think the big news, I think we got to start with this, is the Bank of Canada and their rate decision. Pause. I literally felt the real estate world just go yesterday, because for us, we're shooting this on September 7th. This happened on September 6th. I don't know how you felt about it, Patrick, but I just felt a sigh of relief. I actually got text messages from investors I work with that were like, oh, good, we finally got a bit of a break here. So very, very good news for the real estate market. And I think people are going to see throughout this episode why the Bank of Canada got to that decision of pausing. We're going to show some interesting data, but your thoughts on it for now, Patrick?
Well, I think you nailed it. I mean, it was a national sigh of relief. There was a lot of tension leading up to that announcement. People were very, very nervous and afraid that if they bumped it another quarter, I mean, gosh, it's only a quarter, but it's already on top of the fastest and the greatest increase in interest rates over, I think, probably in history of Canada anyways, of what the Bank of Canada has been doing. So it was a big sigh of relief. And I think it's going to just actually change the velocity or the market in a positive way, at least take the edge off it a little bit. Things can calm down.
Yeah. When is the next rate decision, Patrick?
That's a great question. I want to say October, and we'll see what they do in October. But ultimately, it's already baked in. I mean, listen, we don't know what they're going to do. I'm not going to make any predictions because I actually don't think the Bank of Canada knows what they're going to do. Our federal government doesn't know what they're going to do. This is read and react. We don't know what the decision is going to be.
October 25th is the next rate decision. That's when it's all going to go down. So essentially gives us like a good 6 weeks now, Patrick. I'm very curious to see what the market's going to do. And I think that we were talking with some partners that we have over at DI Vault. By the way, folks, if you haven't checked out our launch of the DI Vault platform, an artificially intelligent platform, you have got to go to di-vault.ca, di-vault.ca. Go check that out. But we were talking about with our partners over there, Patrick, and they were expecting, if we would have got a rate hike, they were expecting some serious flooding of sellers on the market. Now that we haven't had a rate hike, it's going to be interesting to see what transpires. But I definitely have just sensed an incredible relief in the market to give us a bit of runway to see what we can do with this market. And in this case, our runway is 6 weeks.
Let's qualify a couple things here, JG, because, when we're talking about our partners within DI Vault, within that technology, which is being a game changer for investors in terms of finding real estate, what he's saying is if it would have gone up 0.25%, there would have been a flood of real estate onto the market. Now, that's not because sellers want to sell. It is now becoming about distressed sales. So let's be clear about that. It's not like all of a sudden,
oh, rates are up 0.25%, let's sell.
It's no, rates are up 0.25%. We have no choice. We cannot take on more payments. There's going to be more distressed sellers into the market. So I just want to make sure that we're qualifying that. I was speaking in Calgary to a couple hundred realtors just yesterday, and they're really struggling with listings. And we can talk about that when we talk about what's going on in Alberta. But ultimately, people with these rates, they're not wanting to sell. So listings are not coming from people who want to sell. It's actually coming from people who need to sell.
It's now or never.
Okay, sell it all.
And whether that's a job loss, a job transfer, some reason, and primarily distressed, I've got to get from underneath these payments. I can't handle them anymore.
What's interesting about the rate decision, Patrick, and just where the market's at specifically now, I operate in Ontario, specifically outside the GTA, and that kind of those B markets like Aurelia and Lindsay and Peterborough and so on and so forth. What's interesting though, Patrick, is that, man, I haven't had it's been so busy this summer, and typically you and I slow down in the summer. We take a little bit of time off. And even though I've done a little bit of that, it's been so busy because there's been so many deal-making opportunities, things I haven't seen in the market in years and years and years. Way before COVID, I hadn't seen these kinds of opportunities in the market. Opportunities to buy at a great price. Patrick, I have a property under contract right now for $350,000. I never thought I would say the words 300 and something ever again. You know what I mean? So interesting that there's definitely some opportunities that are really showing up. If you're a buyer and you're in the market, and you have a long-term outlook, and when I say long-term, I mean 5, 8, 10 plus years, definitely some interesting buying opportunities. I know it's really busy on my desk right now in terms of the opportunities coming across, but people open to creativity as well. People open to partnerships. People open to vendor takebacks. People open to agreements for sale. These were not possible just a couple of years ago. It's now possible. Patrick and I were telling everyone, Patrick, we were yelling it from the rooftop. Be careful what you buy. Be careful. We're at the top of a market. And we were saying that. And now I'm saying the opposite. I'm saying if you want to get into the market, my gosh, we know. I'm not saying we're at the bottom of the market. That's not what I'm saying. But I'm saying we're off the peak for sure. And it's definitely an interesting buying opportunity. At least I am moving on that. And I'm using platforms like the DI Vault to find those deals, by the way. That's where I find the deals.
Okay, so let's qualify a couple things. First off, you're in the trenches given what you do with Vista Properties and property management, and you as a developer. I know you've got an injury because you haven't worked for a long time. Let's face it, you just blew a tube. That aside, so let's talk about some things here, JG. You're in the trenches. You're actually in the business of investing in real estate. That's your game. I've noticed how slow it is because a lot of investors hope to be investors are out. They're sitting on the sidelines. They don't even know what to do. So my question is for you. I agree. Distressed sales. So we're seeing agreements for sale. We're seeing a huge uptick in rent to own because there's some opportunities there. But I'm curious for you when you're looking at how does an investor get into this market, get into cash flowing properties? So the deals that are coming across your desk that you're either saying yes to or no to, are they detached? Are they condos? Are they townhouses, fourplexes, sixplexes? What kind of deals are you actually seeing come across your desk?
Great question. So first and foremost, it's kind of all of the above. Here where the markets I operate in, there's just not a lot of condo sales. I'm not in that business. So I don't see a lot of condos because I don't buy those usually.
Okay.
So it's really detached, it's duplexes, it's triplexes, it's small multifamily, like less than 5 units. Like for example, I got one person came to me recently and they have 21 units. They have 2 8plexes and a 5plex. And this thing's been underperforming for some time. And now the mortgage rates are coming and he sees the future. He's like, holy crap, I'm going to have to renew at a much higher rate in a year or two. Maybe I should get out from under this thing right now. And there's quite a bit of equity in this portfolio, but there's 21 doors, Patrick. So to answer your question, it's all the different types of properties. And I do want to qualify one thing, that it's not just distressed. When we say the words distressed, people have this vision that it's, people can't afford their mortgage and they're at the end of their rope and it's like a real distressed situation. It's not, in most cases, it's not that I'm dealing with. It's just people that are saying, listen, I see where this is going and I want to get out of the market now for whatever reason. So they're kind of pre-distressed, if you will. They know they might get into distress in the next 2-3 years and they want to get out before it. I am seeing some of that.
I'm in distress. I can handle this. Have a nice day.
I'm really glad you brought that up because that in fact is what a sophisticated investor will often do. They'll look into the future, they'll look into their portfolio, and to your point, it's not distressed as in desperate, I'm sure, and I know there are those out there, but some of it is just risk mitigation given where people are with their portfolio. These are actually sophisticated moves to mitigate against future risk or a future downside. Some are just taking cash off the table because they want to be more liquid. So they're looking at the market going, this is even going to get softer and or there's going to be even more opportunities. So liquidity is the name of the game in that regard. And especially when it comes to financing these days, with OSFI threatening the new rule changes and some of the changes that have been made, financing is more difficult. More money needs to be put down. These are all things that we have to take into consideration. And that's actually just a savvy move, by the way. So to your point, it's not necessarily distressed in the context of desperate, but often these are good moves for investors to make.
Yeah, I don't want to beat this to this horse too much, but I must say, Patrick, there's 2 things, and I work with a lot of real estate investors that don't have these 2 things. And there's 2 things you need right now to take advantage of this marketplace. And too many investors don't have these 2 tools. And there's really 2 major tools in your toolbox here. If you have these, you can take advantage of a market like this. If you don't have these, you're sitting on the sidelines asking yourself, why am I not getting the deals? Where's the cash flow? How come I can't get in this market? And you're kind of sulking yourself to sleep every night. So the two tools are this. Number one is the new AI tools and we've released one of them, this di-vault.ca. Go check it out, DI Vault, which is a platform that's artificially intelligent. This helps you find these kinds of deals. Yeah. It's incredible. And that's one of the tools. Leveraging today's most cutting edge technology is a massive tool every investor needs to use. That's part one. And part two is we got to go back old school and we got to say you need the knowledge. Patrick, the more knowledge you have, the less time and money you need. And those with the knowledge, they can do deals in this marketplace. Those without the knowledge, they can't do deals in this marketplace because it's too complicated.
Yeah, that's a really great point, in that this is a time for some who maybe don't have the liquidity, don't have the cash, to really just sit back and sharpen their saw. In other words, gain the knowledge, invest in themselves to gain the knowledge that they need so that they are prepared for when those opportunities come up. One of the things that I don't want to step over is that there's a lot of conversation right now that's in investors' way, and that is around mortgages and the rumor changes that OSFI is going to be making, and some mortgage brokers saying it's going to happen. And that is that all of a sudden investors need to put 30% down. In other words, loan to value can't exceed 70%. That's what's starting to happen. Now, the consequences of that, if that in fact goes through, which everybody's saying that is already kind of what's happening a little bit, that aside, if that does in fact happen, it's going to even cut back further on the rental availability. So in other words, rental supply, affordable housing and affordable rental supply is going to be, really even get further depleted. So 50% of rental supply in Canada is by mom and pop investors. And so mom and pop investors have got to have the courage, the savvy, the knowledge, the understanding to step up. This is a significant opportunity. When there's chaos, when everybody's running for the hills, we have to be brave, we have to be courageous, we have to be knowledgeable, and actually go the other direction. Now, there's a couple of things, JG, that has just been released with a couple of different mortgage brokers, which is very, very interesting. As you and I coach, we teach, we've been doing this for many, many years with thousands of investors. That is this: get your financial house in order so when you go to apply for a mortgage, it's all there for your mortgage broker. Well, guess what's happening right now? Technology, back to technology. It is heavy, as submitting 200, 300, 400 pages of documents to get your mortgages. Well, here's where technology is also taking it. Now, a couple of very innovative mortgage brokers, and I'm not going to use their name today because I haven't had their permission to announce it, and it's early on, and that is that they are actually getting that work done. So in other words, send us all of this information, but you're only sending them 20, 30, 40 pages of things. Then it has to be verified, but ultimately, based on what you send them, they can actually qualify you based on that pre-verification of information, and you don't take a hit on your credit in terms of a check. So this is some technology that's also happening for investors. We're going to be leading that charge when we talk with some other brokers, and we'll let our investors know what's going on.
Yeah, good point, Patrick. So I think we've covered that in detail on the Bank of Canada rate and some of the OSFI changes. So we made a little modification of that sticky, but that was a good conversation for sure.
Yeah. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.